What I want to talk about is some of those things where you say, okay, I definitely need an LLC. There's going to be some edge cases that maybe you don't need that business entity. But if you're going to have partners, that's one of the things where you definitely want to have an LLC. And more importantly, you want to have an operating agreement. The operating agreement controls the relationship between the parties. It's really important to ensure that everyone's on the same page. If you're going to have partners, business partners, or perhaps even investors, then you should really have a business entity to run that business. So another reason you'd want to have an LLC or a business entity is if you're going to have employees or if you're going to have independent contractors working for you. If you don't have an LLC and you bring on employees, it can be challenging, number one, because there's a lot of requirements at the state level. Set up your payroll account, set up your unemployment insurance, contract with the employee, as well as signing an agreement as an individual with that other person, the independent contractor, who may have a business entity of their own. And so when you're doing these interactions where you're paying people for services provided, it's going to be much clearer and it's going to reduce your liability if you are operating and hiring and engaging them through a business entity. Otherwise, if something goes wrong, you're completely on the hook and all of your assets are on the line. That's really the ongoing theme here, that if you're not operating through a business entity, everything you have is going to be subject to the claims of those business liabilities. Someone sues because you sold them a faulty product that you sold in your personal name, they get everything you have. With a business entity, you get to control the exposure of your assets to those claims. And so really important, if there's any chance you might be sued, if you're contracting with anyone, if you've got employees, if you've got partners, if you're buying property, it's really hard to find a situation where you wouldn't need a business entity. And I think that's pretty much everybody. We live in a very litigious country. It's really if you're dealing with the public in any way when it comes to your business, whether it's through contracts or in person, you probably should have an LLC because there's a threat that you could get sued. And if you're sued personally, everything you've made up until that point is going to be on the line. If you have an LLC, you get to decide how much of your assets are going to be at risk, how much are going to be on the line if the company gets sued, because only the assets in the business are going to be those that are going to be subject to those claims. Another example is if you're making a lot of money. If your business is really going gangbusters, you started out, you thought it was going to be small, and so you were going to try to save a little bit of money on forming an entity and some of the compliance responsibilities associated with it. But now things are going really well. In those cases, an LLC may provide you with an opportunity to do some tax mitigation. There's a number of different entity types that may assist you, as well as tax designations that may only be available if you are a business entity. So if you're going to sell your business entity, you also want to have an LLC or a business entity to really create continuity of business records. Your expenses are going to be paid out of your business bank account. The income is going to go into the business bank account. Your employees, if you have them, are going to be paid out of that business bank account. So an acquirer of your business is going to have a really clear picture of the finances of the company. If you compare this to a situation where you're just operating in your own name, you may be commingling, buying groceries out of that account. There's no prohibition against that if it's just you, if there isn't a business entity. You shouldn't be doing that if you have a business entity. But that's some of the reasons why you should have an LLC or a corporation to operate your business. Another reason to have an LLC or a business entity is if you're going to be running a facility. If you're renting a space and you're going to be operating the business from that space, or you're going to be storing your warehousing items in that space, you are going to be personally responsible for that lease. If you have a business entity, your business can be responsible for the lease terms instead of you. That's a lot of liability you may be able to remove from your shoulders if you have a business entity signing that lease or purchasing that piece of property. Now that we've come to the conclusion that you're probably going to need a business entity, the question often arises, when do I form it? Do I form my business entity when it's just an idea in my head? Do I form a business entity when I make my first sale? Do I form a business entity when I made my first million? The answer really depends. A lot of people will have a business entity that no matter what, they will start the business in that business entity. It's almost like an incubator, their own personal incubator. And you start out with that incubator business. Maybe it's just you who's involved. You start in that business entity and start to grow. And then as the company gets legs, you can spin or transfer that company into a new entity. Maybe that new entity is one where you have a business partner, or you're going to start doing contracts, independent contractor agreements or employee agreements, or start acquiring assets in the name of the business. And so the earlier you can start with a business entity, the better. But you have to think about the cost associated with it. And so when you're somewhere beyond just an idea and you start executing on the idea in one way or another, then that is a great point in time to actually form the business entity. Another area where we often have questions is about when you're buying real estate and when do you form the LLC to hold that real estate? There's a lot of complexity on this topic, and we could talk about this for a long time. But the best approach is to actually close on the property into the LLC so that it was never in your personal name. There's some reasons why that may not be possible for you. And so sometimes people close on the property in their personal name and then transfer the property into the LLC. That is going to give you that limited liability protection. If anything happens, litigation ensues because of that piece of real estate. You do have the problem of that you as an individual connect to that real estate in a public way. And so the preferred approach is going to be one where when it comes to real estate, you actually sign the purchase and sale agreement. That's the agreement to purchase the property from the seller. You sign it in your personal name, and you work with your local attorney in the state who's representing you for that real estate purchase. You make sure there's a signability, that the agreement can be assigned, that the purchase can take place inside of an LLC. And so that gives you the best of both worlds. You can act quickly, sign the contract. Maybe it falls through the deal. Well, then you wouldn't have formed the LLC yet. But if it's going to go forward, very quickly, you can start up an LLC to be the initial holder of that piece of real estate. So getting started too early, I do understand the business cost and concern associated with that, but you really need to think about when does risk start to hit you? When does potential liability start to come in? And you want the LLC or the business entity formed just before that, before you start signing those contracts, bringing on those employees, purchasing those assets, bringing on independent contractors, those sorts of things. That's the best time to form that LLC. Why should you have an LLC? LLCs were created to really foster entrepreneurship, to foster people starting businesses. And what the government wants to do is say, look, we understand you can't put everything you have on the line every time you start a new venture. And so what they allow you to do is identify how much you want at risk. That's what a limited liability company or a corporation does. You're limiting the amount you have exposed to the risk of that business failing. And so it offers that liability protection, but it offers it in a number of different ways. It offers you the opportunity, if somebody sues the business, to protect your personal assets. Whatever assets are inside the LLC, if you put $1 million into the LLC and it's sitting in the LLC bank account, if the LLC gets sued, that's how much is at risk. That's what you are potentially going to lose. If you only have $1 in the LLC bank account, but you've got $999,999 in your personal bank account, that should be protected from the claims against the business. There's some things you need to be aware of, which we'll talk about in other videos, about making sure that limited liability protection actually holds and you're not held personally accountable. But the idea is that you're limiting your downside to what you want, right? Not letting the plaintiff decide how much they're going to get. So that's one of the benefits. We call that veil piercing protection. Does the veil hold so they can't get to you personally is ultimately what we want you to benefit from by having a business entity. Another thing is something called reverse veil piercing. If you're sued personally, right, you get in a car accident and someone sues you, can they get your business assets? Some states are better at this than others. Wyoming is a great state in this regard, but there's some others as well. It's called charging order protection. So each state varies in what they let a plaintiff against the owner of an LLC get. Can they break into the LLC and take its assets, or do they need to stand back and let the business run? And if money comes out of the business to that person, then they can take it. That's charging order protection in a nutshell. So a personal judgment against the individual owner of that LLC cannot be enforced against the LLC assets. They get a charging order against the LLC, and they wait for a distribution to be made. So it avoids that business disruption. We think about the alternative. If you didn't have the LLC and you're running the business out of your personal accounts, that creditor of yours could snatch all that money and really disrupt your ability to create income, ability to further your business, pay your employees, contractors, meet your contractual obligations. Charging order protection is incredibly important benefit and feature of having a limited liability company. So an LLC does limit the liability to those assets inside of the business. Also with a corporation, you're limited in terms of the liability to just what's inside of the business. Sometimes it's not enough for certain businesses that have effectively very high risk, but not a lot of assets. They're not asset rich businesses. They're not sitting with millions of dollars in the bank, but they're engaging in higher risk activities. Sometimes you need to obtain insurance for your business to give comfort to those who you're contracting with. For some, it is a requirement. If you're dealing with government agencies or something like a university or a federal or state agency, as well as in cases where you may be selling a product. If you want to get that product positioned in a Whole Foods or a Walmart or a Costco, they're going to require you to have business insurance in many cases. If you're required to do it, you're going to have to do it. And there's plenty of insurance providers that we work with that can assist you with obtaining that insurance. But there's other reasons to have it as well. The other reason to have it, even if it's not required, is that it's going to prevent that plaintiff from looking for other assets, especially in a lowly or minimally capitalized entity. Your LLC doesn't have a lot of assets. It gets sued. There's not a lot there to pay the claims of that plaintiff. If you have insurance, that's likely going to prevent them from seeking out other assets, like trying to pierce the veil and get to you personally or hold you personally accountable as a manager of the entity. So having insurance is a great thing. And really early on in the business, we highly recommend getting the right insurance in place to meet the needs and cover the liabilities your business is likely to face. Incredibly important benefit and feature of having a limited liability company. Others are privacy. If you buy an asset or operate a business in your personal name, people are going to know that. You're going to say the piece of real estate has listed as the title holder, John Smith. Okay. So people, when they look you up, say, how rich is John Smith? We'll look up John Smith and say, John Smith owns real estate. He's a rich guy. And so I'm going to sue him. But if Susie Smith set up an LLC, purchased a piece of real estate in that LLC, and someone looks up Susie Smith, they're not going to know that she's rich. They're not going to know that there's a piece of real estate that Susie owns that they could potentially go after. And so that privacy really puts questions in the head of somebody who's trying to sue you. Are you worth it, right? Are they going to be able to recover enough to make that litigation worthwhile? There's some soft benefits of having a business entity as well. It makes you seem serious. Are people signing a contract with John Feniak, or are they signing it with my business entity? Having a business entity creates credibility. You are telling the world this is a real business. You've got the business name, that LLC or the INC at the end. The person who's across the table from you is going to think you're serious. You're not just doing this in your personal name. It's not a side hustle. This is something that you're very serious about, which can help you in negotiations. It can help you with interacting, maybe demand higher prices. It seems like you are potentially more than just one person. And a lot of people will put, even though it's just them, they'll put group at the end or the team or whatever to give the impression that there's more than just them involved in it. An LLC also can make things easier when you're transferring the business. You say everything titled in the name of the business is up for sale. It's bank accounts, it's business operations, it's contracts, and someone knows what they're getting, as opposed to when there could be a bit of hiding the football. If you are operating in your personal name and say, I want to sell my business, they say, okay, this car is in your personal name. Is that included in the sale? And you say, oh, yeah, that's part of it, as opposed to, that car is titled in the name of the business and they know it's something that's part of the sale. Another benefit of having an LLC or a corporation is it gives you some tax flexibility. There may be some tax mitigation strategies, not tax avoidance, not tax fraud. These are allowed. The government allows you to do these things when you have a business entity to try to reduce your tax bill. And you can select the tax status of your business entity. Many people don't know this. I like to envision it as when you go to a restaurant and it's a fixed price menu and they say, please pick one item from column A and pick one item from column B. Column A, we're going to say, is the entity type at the state level. The two most common are going to be a limited liability company and a corporation. You could also have on that list, though, a professional corporation, a professional limited liability company, a limited partnership, so on and so forth. All of those on this side are the business entity type at the state level. Then at the federal level, you get to choose your tax election. Okay, your tax election, you can have an LLC, you pick over here, and you can have a C Corp tax election. The main types of tax elections or tax status are going to be disregarded entity, partnership, S Corp, and C Corp. So you can mix and match these over on this side. You can mix and match with these over here. And so there's that flexibility, though, when you have a business entity to choose your tax status for the company. That gives you a great deal of flexibility. And many of our clients have multiple entities with multiple tax status. Maybe they have one that's a disregarded entity for real estate. They got one as an S Corp for the stuff that they're doing where they want to limit their payment of FICA tax. And then they've got a C Corp for things that are really their flyers, the things that they're going to take and do venture capital funding. And so that flexibility exists when you've got the business entity. You have all these sort of different benefits, little really hard and important benefits, and some of the softer benefits. For the cost of forming an LLC, there's a huge value for your business, your ability to generate revenue, your limited liability protection from claims that come against the business, as well as for claims that may come against you personally. So I think we've arrived at the point where you need a business entity. You know the benefits it's going to provide to you. And then the question is, what type of business entity? The two main choices are going to be an LLC, a limited liability company formed at the state level, or a corporation formed at the state level. And so the decision is really one of simplicity. LLCs are much easier to set up and manage effectively. Corporations are more complicated. And if you have more complexity in your business, the opportunity for you to mess up and potentially undermine the limited liability protection is something you really need to keep in mind. I want people to focus on growing their business. I want to make it easy for you to not have to worry about the business entity. We can handle that for you, the compliance that is required. But then beyond those compliance elements, there should be very little for you to do, some light record keeping. That's what you get with an LLC. The LLC makes it easy because you can either have a member managed LLC where there's only one level. It could be only one person involved wearing one hat. You can have a manager managed LLC, which sort of splits it up a little bit. If you've got multiple owners and you want someone to be the main person who's making the day-to-day decisions for the business, you may have a manager managed LLC, and that person may have some credentials. They may have experience. That person is trusted by the other owners of the company. That's really as complex as it gets with an LLC, either member only or member manager, but still with a fairly tight team. With a corporation, you're required to have shareholders. Shareholders own the company. They are the owners of the company. They appoint a board of directors. So you got to have a vote. Who got appointed? How were they voted on? Was the vote taken? Those board of directors then have to be individuals, and that board of directors then makes the important decisions for the company. The most important decision they make is appointing or hiring the executive team, CEO, the treasurer, the secretary. So now we've got shareholders, we've got board of directors, and we've got officers. And there's going to be meeting minutes, notes, records for each of these various levels. And if you don't keep good notes, if someone can't look at the business records of the corporation and say, this was run according to the bylaws, according to the articles of incorporation, you've undermined your structure because you didn't even follow the rules you set up. Why should someone who's suing your company even respect that corporation entity and provide you with the limited liability protection you're seeking. Compared to an LLC, the members' managers, especially in a state like Wyoming, very limited record keeping requirements. It doesn't mean I don't recommend you keep great records when you're making distributions, contributions, decisions for the company. Doesn't mean I don't want you to do those things. But if there are deficiencies in your record keeping, it's not held against you. You exceeded the statutory minimums. And in Wyoming, there's something called the close LLC, which provides that even less record keeping requirements. So from the sake of simplicity, an LLC is going to be much easier for you to manage and less expensive to set up, less expensive to manage. There are potentially some reasons why you would want to have the corporation when that complexity is, we say it's a feature, not a bug. So if you've got independent investors who want to each have a board member for the company, and then they want to really control who the officers are, that's a great structure for that. When you've got a lot of people who may not be all operating under the same rules or with the same goals, by having the corporation structure, you can create more continuity of the management of the company, more control for those shareholders, where that may not be available inside of an LLC with a member managed or manager managed structure. Ultimately, choosing between an LLC and a corporation is a fairly big decision. And so we have created other videos that will assist you with really understanding how to make that choice. And I want to make sure I tell you, you're not locked into that choice forever. Many of our clients start out with an LLC, and then it's necessary when they get that outside investor, when they want the complexity, they make the change. They convert to a corporation. That's totally allowed. Many people don't know that, and they think they're going to be locked into that decision. Start simple and then add complexity as required to meet your business needs. So in summary, you should start your business entity as early as possible, definitely before you start to take on liability. Before you're signing that first big contract, before you're hiring that employee, before you're buying that asset, before risk would start, that's when you want to form that LLC or corporation. Between an LLC and a corporation, LLC is much simpler. It would allow you to focus on your business. You may have a business need where you want more complexity, you need more complexity, and a corporation may be a choice for you at that point in time. But I have to say, very few of startup business owners need the corporation. Almost all of them should start with an LLC. That should be your base case. But keep in mind, if you need to change, you can. And then finally, what are the benefits you get? You're going to get limited liability. You get to decide how much of your assets are at risk. It should just be what's inside the business. And you also get that charging order protection. And then if you do it right, you're going to get privacy. So between all of these things, when to start, which entity type to start, and then the benefits of that entity type, I think we've addressed some of the most common questions our clients have. And we look forward to helping you start your business when the time is right. When it comes to your LLC, there's another key piece you need. That's a registered agent. You're required by law to name a registered agent for your LLC. It's not just a formality. Registered agents are crucial, and if you don't name one and don't keep one, then your company could be dissolved by the state against your will. What is a registered agent? It's a key piece of the puzzle. If you want to find out more, watch the next video.